This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Qatar Energy Chief Saad Al-Kaabi said on Monday Red Sea shipping disruptions would limit the arrival of products to customers in the long term and that diversions were not ideal as they added to the cost and length of journeys. Yemen's Iran-aligned Houthi group has since November been attacking vessels in the Red Sea, part of a route that accounts for about 12% of the world's shipping traffic, in what they say is an effort to support Palestinians in the war with Israel. Qatar Energy, one of the world's largest exporters of liquefied natural gas, said in January it had stopped sending tankers via the Red Sea on security concerns.
Oil prices fell as investor attention returned to the demand outlook after reports of higher producer prices in the US, the world's biggest oil user, stoked worries that sticky inflation and higher interest rates would limit fuel consumption growth. Brent crude futures were down 55 cents, or 0.7%, at $82.92 a barrel at 0720 GMT. The March contract for U.S. West Texas Intermediate crude, which expires on Tuesday, was 41 cents, or 0.5%, lower at $78.78. The WTI April contract was down 0.7%, or 54 cents, at $77.92.
Moving on to the top news in the energy sector.
Singapore on Monday said travelers would need to bear the cost of the transition toward green jet fuel, announcing plans for a levy that would lift ticket prices on departing flights as the aviation industry searches for a viable funding model. Introduced by Singapore's transport minister at an industry summit on the eve of the Singapore Air Show, the city-state said it aimed for all departing flights to use 1% sustainable aviation fuel, SAF, from 2026 and plan to raise that to 3 to 5% by 2030, subject to global developments and the wider availability and adoption of SAF. Aviation produces about 2% of the world's emissions but is considered one of the hardest sectors to decarbonize.
Saudi Arabia's non-oil growth is expected to come in above 5% in the medium term, Finance Minister Mohammed Al-Jadaan said on Monday, slightly lower than the 6% figure previously projected. If you look at the non-oil GDP, it is growing at very healthy numbers, 4% and north of 4%. We are expecting 5% plus in the medium term, Jadaan told delegates at the Saudi Capital Markets Forum in Riyadh. The world's top oil exporter is accelerating plans to diversify its economy away from oil under a plan known as Vision 2030. It aims to develop sectors such as tourism and industry, expand the private sector and create jobs. Next, we have the top news in metal markets. Iron ore futures prices slipped on Monday, as traders took a cautious stance after rising stocks and weak steel margins counteracted with hopes that demand will pick up in top consumer China following a week-long Lunar New Year holiday break. The most traded May iron ore contract on China's Dalian Commodity Exchange reversed course from earlier in the session to close daytime trade 0.52% lower at 951 yuan and 50 fen, $132.20, a metric ton. The benchmark March iron ore on the Singapore exchange slid 2.91% to $127.45 a ton, as of 0706 GMT, in part due to fading bets of early U.S. rate cuts amid stronger than expected U.S. producer prices in January.
Australian lithium stocks rallied on Monday on speculation that Chinese battery maker CATL had closed its Jiangxiawo mine in China that produces the material used in electric vehicle batteries. Shares of Australia's biggest pure-play lithium miner Pilbara Minerals rallied as much as 4.9% and Liontown Resources surged 7.7%, amid an upbeat tone in Australian resources companies. Jiangxiawo produces lepidolite, which is a high-cost form of lithium. CATL did not immediately respond to a Reuters request for comment.
We will now look at the top news in the agricultural sector.
Indonesian grain buyers are boosting imports of lower-quality wheat, as a decline in corn output last year following a severe drought linked to an El Niño weather pattern tightened the country's animal feed supplies. Wheat imports into Indonesia, the world's number 3 buyer of the grain, are likely to climb at least 10% in 2024 from around 10.87 million metric tons last year, according to Singapore-based grain traders. Indonesia millers have been buying larger volumes of wheat mainly from the Black Sea region, a Singapore-based trader at an international house said. Some of the wheat is of lower quality and it is expected to be used in animal feed.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.